here's an incredible stat. Oil is headed for its first monthly gain since September. A big reason for that, these tanker diversions away from the Red Sea and rising fears about a wider war in the Middle East. We're joined by Bob Yawger, energy futures strategist at Mizuho Americas. Bob, it's great to see you. President Biden has said he's decided what to do. We don't know what it is yet. But you said this week that if he does strike at targets within Iran, we could see oil, we're likely to see oil go above $80 US.
Yes, I believe that's probably the case. It could rip way above $80 for that matter. However, I don't think that is the most likely scenario. But we have put in the first big month since September here. We have a couple of factors that have put the bid in the market. And in my opinion, Andrew, to sustain these numbers, we're going to need something along those lines. It's getting a little wobbly against these highs here. At least yesterday's highs, and we're going to have. It's going to take a geopolitical misstep by somebody to sustain levels above $79, in my opinion.
You think there are sufficient doubts about demand globally to push oil down if, well, let's hope we get some kind of resolution in the Middle East?
Well, that would be huge. If there's a resolution in the Middle East, I think that the price slides pretty good. OPEC could try to keep the barrels off the market, but the U.S. producer is moving barrels for size. We had the freeze in just not even 2 weeks ago, and it took 1 million barrels off the market last week. That's one of the reasons we got to $79 this week was U.S. production slid off the face of the earth because it was cold in the production zone. 700,000 of those barrels just came back online, according to this week's EIA storage report that just came out at 10:30. Market was traded lower, sharply lower there for a couple of minutes. As a result of that, also, Andrew, exports were down, and the amount of barrels going through the refinery were down big. That implies that refiners are in no hurry to bring the refinery utilization rate back quickly and make a lot of product. They don't need it. It's the end of winter. We have a lot of heating oil available. We don't really need to make more. And it's not gasoline season yet, so we don't really need to make a lot of gasoline yet.
We actually were talking about Marathon Petroleum yesterday. I forget what the ticker symbol is, but that company just spewing out cash. And actually, our guest, an analyst who loves the stock, said the refining sector in the States has been doing pretty well lately.
Yes, that's MPC for Marathon. And today, basically, Phillips 66 did the same thing. They're both trading at all-time highs. And so, yes, the refiner sector is doing pretty good. I mean, when you take a barrel of crude oil and you crack it you boil it, you effectively crack it, half of it turns into gasoline, a third of it turns into heating oil. That price for that heating oil and that gasoline coming out of the refinery, it's nowhere near all-time records, which both those stocks are. So that's a bit of a disconnect there. But they're doing pretty good, and the refiners are doing pretty good as a result. We're not doing anything anywhere near as close to as well as we were, let's call it last year, when those guys were really printing money. But they've been just plowing forward, and here we are at all-time records for both of those refiners.
Bob, we've only about a minute left. The Wall Street Journal says that when and if we get our Trans Mountain pipeline expansion in Canada going, it's going to mean less cheap oil for the U.S. Midwest. Do you think it will mean that much of a difference?
I think it'll make a difference. I don't think it's a game changer, but those barrels start going to the Pacific and you start exporting from the Pacific, then those barrels will come to the United States. And what will happen is less barrels will go to Cushing. Cushing is the NYMEX delivery site, and those barrels will increase in price. It's just a function of supply and demand. There'll be less supply in Cushing.